The stock market is crashing. What do we do? In today's video, we're going to look at VOO and a few other stocks to try to figure out what is going on in the stock market. Before I continue, this is not financial advice. I'm not professional. I don't know what I'm doing. If I knew what I was doing, I'd be rich. This is just purely for entertainment. But yesterday, NVIDIA reported earnings. Let's look at NVIDIA before we look at VOO. And we see that prior to today, NVIDIA had moved in below the 50-day moving average and is finding resistance at the 50-day moving average. We see here support at the 1.414, resistance at the 50-day, support at the 1.414, resistance at the 50-day, and then it reported earnings and the stock was up over 5% after hours. It opened today up 5 to 6%. We see it opened here at about 195. Everyone thought things were good. Price was now way above the 50-day moving average. Everyone thought bull market back on. Let's go. And then what do we see? The stock price went from 195 all the way back down to 180. But looking at this chart now at the end of the day, it's really not super alarming. Yes, that was a big reversal, and yes, not a great thing to see, but it found support again at this 1.414 at $180. Aftermarket, we see that it has moved below that, it is now at 178, coming up on the 100-day moving average. So right now with NVIDIA, and we'll talk about with the other stocks, is we have to look at these moving averages to see what happens. There's no doubt in my mind that NVIDIA is going to touch the 100-day moving average, and we will see what happens then. But let's look at VOO. So we still have the Fibonacci retracement from the previous high to the previous low. This previous low we see was way below all the moving averages. And this was when there was a really big macroeconomic event, when Trump was talking about all the tariffs and there's a lot of uncertainty in the market. So we saw a very, very big crash from 564 all the way down to 440s. Right now, there's really not that big of a macroeconomic uncertainty. I think there is a lot of uncertainty in the market regarding the AI bubble, if there is one, all the big tech companies and the CapEx spending, the circular funding between NVIDIA and all these companies, whatever. So yeah, I think there is a little bit of fear and uncertainty around that, but no huge macroeconomic events. At least not that I understand. I saw people talking about the Japanese yen and the Japanese bond rates and interest rates and how that's going to affect our stocks. That's beyond my pay grade. I don't know all that. But looking at VOO, we see that today it is coming up right on that 100-day moving average. After hours, it has gone down a little bit more. So just like NVIDIA, I fully expect price to touch this 100 moving day average probably tomorrow. And then we're going to have to kind of wait and see what happens. Since price is going down and I don't really see a huge macroeconomic event, this to me is a buying opportunity, but it is important to buy at key levels. Don't just blindly buy. So I did make a couple buys today. I bought Microsoft and Amazon. So let's look at those charts. All right, here's Microsoft. Right now, I have a Fibonacci retracement from the previous low to this high, assuming it is the top of a wave or a cycle up. And right now, price is right around the 200-day moving average, and it found support right at the 0.38 retracement. I think buying Microsoft around the 200-day moving average is never going to be a bad thing. Obviously, there will be moments like, again, in April where there's big macroeconomic events where it can go well below the 200-day moving average. But long term, if you're buying and holding for years, I think that's a great time to buy. So I added to my Microsoft position. Let's look at Amazon. All right, here's the Amazon chart. We see prices right around that 200-day moving average. It is slightly below it right now. I bought right at 218, I think, so almost right when it was touching the 200-day moving average. Again, just like Microsoft, I think long-term buying Amazon at the 200-day moving average is going to be a good thing. Obviously, there can be times where it dips below, but long-term, if you look back, look at this time where Amazon touched the 200 moving day average. It did go a little below it. It went from 119 all the way up to 200 before it went back down to 150. So again, long term, I think this is a great time to buy. So I added a little bit to my Amazon position. I'll tell you one stock that is making me angry, Coinbase. So my cost basis on Coinbase is $250 per share. At one point, it was up at 244, so I was up like 80%. Now I'm down, I think like 5% or something like that. So not too happy about that. But if we take the Fibonacci retracement from this low to this high, we see that it is coming up right on that 786, so it could quite possibly get down there. I was hoping that it was going to bottom at this 0.65 around 248, which is about my cost basis. It went a little bit lower. It's currently below all the moving averages. RSI is at the bottom. So we're going to have to see what happens. I'm not touching my Coinbase yet because long term, I do think it is going to go up. I'm just honestly kind of disappointed that it's gone so far down from 440 all the way back down to 240, basically. That is crazy. Let's look at Google. Okay, so Google's same as everything. Price went up, went back down. I definitely want to add to my Google position. I'm going to wait to see if price gets down to these moving averages. I would love to get it at a much lower range. We see the price popped up all the way up to above 300. It got up to 306 and now it's down to 288 post hours. So Google is one I would definitely like to add to. It is quite a bit above the 50-day moving average. So I would, again, love to see Google come back down. We looked at NVIDIA, so we might as well look at AMD. AMD is starting to move down below the 50-day moving average. And if we look here, I did the Fibonacci retracement from the low to the high. The 0.382 retracement lines up right with the 100-day moving average. If we get down to this level, about 194, I probably will add to my position. So I'm going to have to wait and see what happens. But there is no guarantee that price won't go lower. We have this big gap up from the announcement with OpenAI, where price was at about 170 and it jumped all the way up to 203. This gap is right at the 0.5 or 50% retracement. So I'll probably add a little bit here at 194. And if it price gets down to 170 range, I'll add again there. Again, I'm viewing this as a good opportunity to add to positions I want to hold for years. If you're looking short term for weeks, maybe 1, 2, 3 months, I don't know what's going to happen. Price could keep going down further. But that's why it's important to buy at key levels where there was previous support, at Fibonacci retracements, at moving averages, because those are most likely going to be better buying opportunities than just blindly buying. So yeah, the market is volatile right now, but I don't see us having a huge crash. Realistically, VOO was at like 634. It's now at around 600. That's like a 5% decrease. That's nothing. A 5% decrease is not anything crazy. Like we talked about before, back in February, price went from 563 down to 442. So that's 120. That's like a 25% decrease. So the 5% decrease doesn't scare me. Again, I view it more as a buying opportunity. I bought a lot during this big dip and that paid off very well as those positions are up a lot. But as of now, we're kind of in that wait and see moment. I wouldn't do any crazy big buying. If you want to add here and there to your positions, I think now is a good time. Again, not professional financial advice. I don't know what I'm doing. This is just my opinion on what I think is happening in the market. What do you guys think is going to happen? I don't think the AI bubble is bursting. I don't think it's a bubble per se. I do think there are some accounting tactics that might come back to bite people, like the high capex spending, the circular investing. We'll have to see how that plays out. And I know I've stressed this in my previous videos, but this is why it's so important to have a plan before events like this happen. When you see this giant red candle today, a lot of people panic. But just like what happened earlier this year, a lot of my friends were calling me during February, March, April, asking me if they should sell everything. I had one friend that had called me the beginning of April and he asked me if he should sell everything. He literally called me at the bottom, right at the beginning of April, wanted to sell everything. I told him not to. I told him just hang on to everything. If he would have sold, he would have sold at the very bottom. But that's what moves like this do. They make you panic. They make you make bad decisions. They make you sell low. You never want to sell low. The whole point of all of this is to buy low, sell high, not buy high, sell low. Seems pretty simple, but all right, that is it. Enough babbling from me. again, take some time, look at the charts, make a plan. Don't buy and sell emotionally. Have a plan in place. That's it. Let's keep these portfolios growing.